Hello and welcome to the closing beat, everybody. Happy Wednesday to you. Hump day, right? How you doing out there? Welcome. We are financial advisors here at Jazz Wealth. Hope you'll check us out at jazzwealth.com. You can even schedule a call. We don't have sales pitches because we never took the time to do it. So when you give us a call, you can ask your questions, see if we're a good fit, and then we'll just say goodbye. No sales pitch. We won't push you to do anything, but we may be able to help you along the way. So feel free to do that on jazzwealth.com. Last week, our Wine and Wealth class, we do this every Thursday. It's private for clients, but Eric talked about how taxes work in retirement. We're actually going to take a step back now. Okay, so we made the decision. Tomorrow's Wine and Wealth class, we're going to come back a little bit to the beginning stuff, and then I'm going to do like I always do. I'll start with something really basic and then layer until we get really complex. Then we'll move on to the next topic. Simple. This is how it works. And then how do you get really geeky with it? So I don't know. I've just been feeling like doing some geeky stuff lately, but I noticed there's a lot of basic questions. We're happy to help with any of that. We are also the official financial partners of Drum Corps International. Super excited about that. More to come this summer. You're going to see us all over the place with them, and I am super excited. You could probably care less about that. What you're probably wanting to know about, thank goodness, CPI or the word inflation was not the drinking game today, or I probably wouldn't be here, right? That's all that anybody cared about, right? It's what moved the markets, what everybody wanted to know about. We've got some of that good stuff for you. Inflation is, so for the last 4 months, inflation has gone up, right? A little bit. But what's interesting is it's gone up by more than the smartest people in the room had actually anticipated. So we've had this, faster than normal increase in inflation. What that does, in both headline inflation and the core, where you take out energy and stuff. And so, the question now is, oh no, do we get rate cuts? Oh, now we're down to 2. Right? So, well, really 1.8, but that's essentially what the market thinks is, oh no, we were going to have 3, now we're going to have 1.8. So we're really quickly shaving that off. Whereas just a week ago, we were solid at 3, right? So it gives the Fed a chance to go, oh, wait a minute, we don't need to be cutting rates. That's going to raise inflation even more. It also starts to have that conversation around, maybe we need to go up a tick for rates. So we'll see what the Fed decides there. Now, it's kind of fun. If you look at inflation here, the numbers that came out today. One of the reasons for inflation being higher was car insurance. I know, that sounds stupid, but when you dig into the actual details, car insurance was up 2.7%. Car insurance. Yeah. I mean, that's kind of a lot. Car repairs up 1.7%. It's not really like an economic moving type data point. Like, that's not going to slow the economy if our car insurance goes up another 5%. We're all going to complain about it and yada, yada. But it's not going to slow you from your other spending, right? So that was kind of cool. What do you call it? The car insurance and car repairs, that accounted for 1/3 of the increase in the price. So it just shows you, even though it's a small subset of the data, it was pretty significant increase there. Medical costs were also one of the reasons that we saw the inflation number go higher. And if you really boil it down and you want to get really geeky about it, I don't know you want to do this. It has to do with healthcare personnel. They can't find enough of these people, or they found less than they want to, so they have to pay them a little bit more. If you want to look inside of it, I just have some fun. I was digging through some of the things there. Your spending on pets, right? Inflation for your pet spending up 1%. Used cars down 1.1%, and apparel up 0.7%. Well, like I said, this just really changes the probabilities of rate cuts going forward there. When you see where they came from, we had like a 60% chance of a rate cut in June. Now that's down under 40 again. It's just flopping all over the place there. Now, if we look at the old stock market here, here's the S&P. We can pretty soon take off these lines. This was the lesson of the last 2 weeks. Hey, we're coming outside of this area. Expect volatility and a big move. We've gotten a handful of those big moves along the way. Now today, if you were like a day trader, it was kind of boring, right? Let's go to the 5-minute. If you were someone who was really active in the market, see the majority of the move today happened before the market even opened. Call that a gap down. So essentially the pre-market activity, we get the inflation numbers and fall apart. Then throughout the day, look, nothing really happened. It was sort of a choppy, range-bound day. No one wanted to be the first to buy it, and certainly people were deciding to take some of their profits. So I thought that was pretty cool. That was pretty much the same across the board, no matter what index you're looking at. And remember, we are big fans of telling you ahead of time instead of telling you, I told you so. I don't like doing that. Anybody can look at a market and go, well, yeah, but it's because of the volume or whatever happened. No, tell me beforehand. If you can tell me beforehand and give me some data, then that really helps. Remember, I did that for you guys. We took a look at the S&P, the percentage of stocks overbought versus oversold. I'm trying to adjust as we go. I'm a bit of a perfectionist here. We talked about this because the last 4 times before this, when more than 65% of the stocks in the S&P are considered overbought, the S&P doesn't like that. You tend to see a pullback. If you don't, you see volatility. A lot of wiggling around, which is exactly what we have. So we were in that danger zone, and the overbought, oversold metric strikes again. Right? Got it correctly there. If we look through the individual sectors for the day, you're not going to be too happy. I don't know what to tell you. Energy continuing on its run. This is a fairly impressive run there. And actually, if I bounce on over to oil, we had oil inventory numbers come out today. That early morning volatility pretty much faded away, and we started grinding higher there. But if we look at energy, that is the only sector that was positive today. It held on there towards the end of the day. You had some nasty stuff out there. Look at real estate. That's a 4% decline to the downside. Right back to the 200-day moving average, right back to where it bounced before. No, I don't know what's going to happen next. But when interest rates have such a large move like that, well, you're going to get those interest rate sensitive areas doing that. What's pretty cool, if you look at bonds, interest rates, etc., the pricing of bonds, we are moving back down towards the lower end of the range. So we talked about this bond market being a very technical traded market, right? So people like to use support and resistance, Fibonacci pullbacks, and extended and overbought and oversold, standard deviations, and all that great stuff. Well, we're moving all the way, almost in one day, all the way back down to the bottom of that range. You expect that that's where people will take their shot and assume that rates will not be moving any higher, at least in the short term. In this case, meaning prices will stop going lower in the short term. Got a little bit more to go, but that is all driven by the inflation numbers here today. I'll point out, if you're really nerdy, our Jazz After Dark tonight, right? Yeah. Our Jazz After Dark tonight, we're going to talk about how to outperform the S&P with a really simple hedge fund tactic. And I'm not just going to give you my opinion. I'm going to give you all the data. We're going to go through current and exact data of how it works. We're going to talk about selling out of the money covered calls, how far out of the money, what was the total yield, what's the best way to look at it. So if you're feeling like you want to be a little nerdy here tonight, come on and check it out. I'll be there with you. Let's go back to the sectors real quick. You've got utilities, those two, real estate and utilities, obviously one or the more interest rate driven areas. And 1, 2, 3, 4, 5, 6, 7 of the 11 sectors lost over 1% today. It's a rough day. I'm going to complain about that. Russell 2000 took the biggest hit today. It was also one of the better performers in the short term. Small cap value took the worst of the hits, down 3.2%. The Russell 2000 itself lost 2.6% here today. The index, of course. And then small cap growth stocks, they did the best out of all of them, I guess, but they were still down 2.2%. They're big. Everything besides large cap growth was down over 1%. And something happened where people said, oh, the market's down. That must mean we should buy more NVIDIA, right? There you go. One of the obvious stocks that were higher on the day. So I don't know. Everybody just decided, oh, that's never going to go down again. Let's just buy that. What else do we got? Hey, I'm going to jump over to stocks in the news here a little bit quickly. By the way, if you like the really simple explanations of finance, investing, short, quick tips like that, Haley is doing a killer job on her channel, YouTube, Doe Straight, and you can actually check that out there. Super cool. I've been helping her out with some of the videos in the background there, as well as being on some of those. If you want to see more, learn more, of course, that's where you go. Hey, stocks in the news. Taiwan Semiconductors actually was able to finish positive on the day. It was hit or miss for a little bit. It did wiggle back and forth between positive and slightly negative there. Sales up 36%, they say. Excuse me. They have over 50% gross margins. I think it was 52% gross margins there. They're making all kinds of money, and yet we still need some CHIPS Act money, guys. We talked about that yesterday. All that money, incentives, tax breaks, etc., they're going to get to go on out to Arizona. But nonetheless, they were in the news, and they actually held up pretty good. So you got to kind of reward them for that. Delta, I'll spend a minute on this old Delta here. This was just an unfortunate day for Delta. It was down about 2.2% on the day, but of course started off strong. Look, this is the open right here. If you're not familiar with candlesticks, we have 3 classes in the dojo. Just search candlesticks and we'll actually go through it. Not an opinion, we'll just tell you what everything means. At first, we started off with a gap higher and then actually ran higher. Just an unfortunate day to release earnings because the market was so freaking weak throughout the day. A couple things that we always talk about. And what I thought was really good here with Delta. They're killing it, by the way. Everything was great, almost. Besides, if you really want to look into it, freight volume was down a little bit. It was down like 15%, but not really enough to be damaging and certainly not bring the stock down. Load factor, we talked about this. Load factor and capacity. These are the metrics you use. Airlines are really easy to analyze unless you have wild volatility in the oil futures market. But airlines are pretty simple. Load factor. What is the load factor? How many seats are being sat in per mile? So I just wanted to show here a little bit of a comparison. So we're 82.7%. The blue is this first quarter, which they just reported. That's up a little bit from the first quarter last year, 81%. So load factor is good. In other words, more people in more seats. The cool part about this is that the capacity, meaning how many seats did they have for butts to be sat in for the miles, that was actually up about 4% as well. So we have more capacity, more seats to fill, and we have more people willing to fill those seats. So that was pretty cool. I then went a little bit nuts here just for fun, because you know how they'll do like revenue per available seat mile. How much money did they make per seat mile that was available to be filled, right? Whether, hopefully somebody was sitting in it. So check this out. If you take their gross margin, Delta, and you say, I'd like to know what the gross margin is per passenger per mile, it comes out to 3.1 cents is what they make. So imagine that. You're sitting in the plane. You've paid your fare, whether you got a good deal or not. You're sitting there, and their average, or their gross margin, for every mile you fly, they're making 3.1 cents. Does that sound like a lot or a little? Because if you think about it, like, how far do you fly? There's a lot of flights going around there. 3.1 cents times all those people, extra load factor, maybe it's pretty good. So I thought, well, is that higher or lower than where it's been? If you look back before COVID, their revenue per passenger, their margin per passenger per mile was less than 1/3 of a cent. It was that close to them losing money there. So when you talk about it being a cutthroat kind of an industry there, that's just a fun way to look at it. You won't hear that anywhere else now, will you? Apple's in the news there. You now have, I don't know if this is good or bad, they are trying to move towards India for iPhone production. They said, you know what? 1 in 7 phones that we are now making is being made in India. So that transition is going really well. Not really a stock moving thing today, but that was in the news. And for purely volatility focus here, PriceSmart. So PriceSmart's earnings came out, another one. Not horrible. This is a cutthroat industry too. PriceSmart's earnings come out and earnings beat, all that stuff. Sales, right? So their total sales per store actually came in higher by 8.8%. So if you're a PriceSmart shopper, it means you've been shopping there just a little bit more. And that was good for them. Just a bad day, really, to have interest rates spike like they did. Have obviously a small cap stock needing to borrow. Remember, small cap stocks, they can operate in higher interest rate environments. They can't easily operate in volatile interest rate markets, which is exactly what we have. So that's a bit of a bummer. Delta unofficially, right? Or officially, Delta kicked off this season's earnings, but the unofficial start really starts with the banks, and that'll be coming out as the week ends and going into next week. Earnings tomorrow, we got CarMax, Constellation Brands, and Fastenal. Constellation Brands has only been up 2 of the last 8 earnings reports. So, take that for whatever it is. kind of impressive to, I mean, actually, so it gets a point for relative strength, right? Stock market had a really rough day. People said, well, I guess everybody's going to go buy more alcohol. The stock market's falling. Constellation Brands actually was up 0.75%. So is that the analysis there? Is that what you see like on CNBC or something? Well, the market's falling. People want to drink more. Who's that going to benefit? The people that sell the drinks. Anyways, I'll take your questions if you have any. Also, Jazz After Dark, one great one that we did recently was, if the market pulls back and you're a long-term investor, is there an amount that you want it to pull back where you can historically guarantee that it will be higher 1 year from now and 2 years from now? So we pulled all that data and put a real cool one. I did put it together for you if you want to check it out. All right, let's see what questions you have. Otherwise, I'm going to get out of here. I'm going to do what I got to do for the rest of the day. Grateful says, I bought and sold oil all day today. I don't blame you. If you were wanting to be active today, what were your choices? Bond futures, oil, and gold was pretty directional to, bond futures and oil, right? That was your place to play. Energy stocks, things like that. So you had the right focus there. Yeah. What's the theme of the earnings season here coming up? Unfortunately, I don't know if you call it a theme, but it's going to be on the top 10 stocks. We have all of our eggs, not me, Jazz, or anything, but the stock market has all their eggs in the top 10 stocks. I'd even say the top 9 because one of them we're actually, Apple, we're expecting not to have any reportable profit there that we can use, right? Apple's total earnings year over year expected to go down. I didn't mean to say profit, right, or total earnings going down. But you look at the top 9 here. These are the guys that are going to drive almost all of the 3% expected earnings growth rate in the stock market, in the S&P, I should say. And you get a lot of spam calls. I feel like the spam calls have really ramped up here lately. Also, student loan forgiveness. Yeah, it's about election time, so they're going to talk about that again and make it look like something's going to happen there. If you're on an income-driven repayment plan, you stand the best odds of getting some money. Remember when Biden was when they were campaigning, Biden said, I'm going to get rid of $10,000 of your student loan debt. And then it was like silence for 3.5 years, right? Well, that's coming back up. So expect more discussions on that and all the details. He sold some NVIDIA and bought some Tesla. Good or bad? Fast Eddie. He sold some NVIDIA and bought some Tesla. I mean, I can't tell you. If you look at the analysts, they all believe, yes, Tesla is going to be higher, and they have all their great reasons for that. Also, it's discounted, right? So is that something I would look at? Yes, I love discounts, but I can't tell you that you're, doing the right thing. I'll get in trouble for doing that. Swamp Rat's got 33 calls in one day. Well, that's them websites you be signing up for, man. That's what's going on there. Doc's getting lots of spam calls. I know, right? I think you can feel it, My phone, it comes up red, says spam. Dang. It's time to trim some Broadcom and Microsoft. So I'll never, ever give you a specific answer on this one. And the reason is, when you buy something, you should already know where you're going to trim it. I know now, by you asking that question, you have no track record of your investing life. You can't tell me how poorly or successful you are investing, right? Because you have no goals. That means there's no way for us to track a success rate, right? We're missing a variable that we can't solve for. So, but if you're looking at something like Broadcom, of course, it's had a great run. Would I want to take some profit going into where this market is at, and the tech sector and the semiconductors being, financially where they're at, and I mean fundamentally where they're at? I wouldn't blame you for that. I would ask you to be a little bit tighter with your profit targets. What is it? What are we shooting for? 8%, 10%, so many dollars, whatever it is, figure it out. And then Microsoft, I personally why now? This one's troubling, right? Because you've had moments where you could understand, right, as it's going up, I'm going to take some profit. And then it goes sideways. So right now, it's been going sideways for 2 weeks. What's the stock market done over the last 2 weeks? Kind of sideways, but, a little bit of a pullback. So you're bored or you're anxious. Something's changing, right? Because the stock has not done anything in 2 weeks that would get you to be excited or fearful, right? That's the worst part, too, is they leave messages. God, can't just delete them. So I'm going to pick on you a little bit for that one, right? you're either bored or trying to convince yourself about something there. You're not being mechanical about your decision. So that's what I would say. Why was SG? So unfortunately, a lot of stocks that did report earnings today did get hit. And this is a different story. You'd have to look into it a little bit. I did not. But this didn't even try to start higher. So something else going on there. Large cap, Kaylin says, are large caps outperforming mid and small cap in the past decade because tech is such a winner-take-all sector? Is large cap expected to lead in the next decade? I don't have a clue. I couldn't tell you. Remember, well, I think you're younger, right? There was a time where transports were what moved the market. The Dow Jones Industrials, right? We put coal onto trains. The trains took them. We put steel onto trains, usually in trucks, and we sent them to towns, and they built these big buildings, and that was what grew the economy and grew the stock market. Now it's the little things that go inside the phone, right? The transports don't have as much of a say, right? It used to be financials and transports. So now, as in our lifetime now, we have things that every single thing in front of me has some sort of electronic component or chip inside of it. That's what's leading the way there. That's why they're the dominant one. If I remember, I'll go back. I actually did a chart one time where we look back through history and you see technology and how much of it, the total market cap of the S&P, it's actually taken over. And at one point, you can actually see the industrials like, oh my gosh, so big. That was what they were. They were the dominant one. So yeah, I knew you. I couldn't remember your age exactly, but me and you are not old enough to have lived through that time frame where it was like, we're going to build a whole town over there, New York City, whatever, or Tampa, Florida, and we need steel, we need all the materials, we need all the concrete, we need the people. That's what used to drive it. Yep. Oh, that's one way to say it. Semiconductors are the new semis. Semis. I love it. All right, I'm going to wrap it up there and get out of the way. Hope you learned something here today. Tried to change things up just a little bit. If you did not tonight, I guarantee you'll learn something, especially if you like options, covered calls, portfolio outperformance, and the specific data wrapped around it, not just some guy saying, I told you, you can do it. I don't like that. I come with an idea. I come with the data. You guys enjoy the rest of your evening or day, wherever you're at there, and we'll see you on the flip side. Enjoy.
At Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar. I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.